Hi there, welcome to East Bay Real Estate TV. I'm Lisa Doyle, your host for today, and Greg and I created this web show to help assist you with information that you need, questions you have about our economy and our market. And our reason for that is to bring you experts in the field of real estate in the Bay Area to help answer those questions for you. And today we have a very special guest. Her name is Rodoni. And Carol is just a wonderful, very smart woman. She truly is one of the smartest people that I've ever had the opportunity to learn from. Carol has built and grown huge companies across the Bay Area. She is the founder and CEO of a company called Bamboo Consulting. And Carol now travels across the country to speak to folks about the economy and how real estate changes are affecting all of us today. And so thank you so much, Carol, for joining us.
You're very welcome. It's a pleasure to be here.
Thank you. But our biggest question that we know all of us have is how real estate is changing and what it will do to affect us in the future. And what are you seeing for maybe the next couple years to come?
Well, real estate has certainly changed. We've obviously come through one of the worst downturns we've ever had in real estate. So I think people are stepping back. They're a little bit scared. They're a little bit hesitant about it.
Cautious.
But real estate and the reason why you buy it always remains the same. And so I think when you think about real estate, what people really need to ask themselves first is why they're actually buying real estate. So let's talk about where the value is. The value of real estate is really in the land. And the land is where 95% of the value is. And as long as you buy in a good location where there's obviously never going to be more land because it's a limited resource, you can rest assured that over time it will appreciate the value. And if you do it right, and that's the key with real estate, you have to get a loan where you put some equity down. You have to make sure that you have that loan so it buffers you during the periods when real estate goes up or corrects. Yep. And you have to make sure that you hold real estate for a period of time. It is not an ATM machine. It is not an instant asset like stock that you can buy and sell every day. You basically have to wait 3 to 5 years in good times, probably 5 to 7 years in correcting markets. Yep. And if you do all of that, real estate, the basic fundamentals have not changed. What's probably changed with real estates now, and I think basically it's a good time for people to look at the real estate market. We have come through this downturn. We're probably close to the bottom, maybe not quite right there yet, but I think affordability has increased. Interest rates are the lowest that they've been in 38 years. I don't think they're going any lower. I think that it's a good time for people to get back into the market as long as they do it correctly. That fundamental will never change. What basically has changed is how people look at the asset. I think we've gone from a frenetic, emotional, this is my school district, my memory, a place where I want to live, my lifestyle. People are looking at real estate more as an asset. Where is the value? Where is the opportunity to get in? Where is and how will it hold its value? What about interest rates? And that's a good thing. That's where people should have been over the last 5 years because it is an asset. You do want a return on the investment. And so thinking about it as an asset, looking at the numbers, making sure they work for you, making sure the value is there long term is where real estate has gone, and I think that's a good thing.
Where do you think we are going in Bay Area real estate over the next couple of years? Where do you see our changes as far as, are we likely to see an improvement soon? What do you think?
I think the market has changed from just last year. Let's start with that sort of. Basically go back to 2000. We had that frenetic, basically. Everybody wanted to get into the real estate market. It actually started to correct in 2005, but people weren't basically thinking about that because it was still free, easy money. We've gone into this downturn. Where are we? I sort of have a formula. I think that we're close. I think anything that basically has gone down wherever you live, 5 to probably 20%, is probably going to go back to 2001 real estate home prices. I think anything that's down probably 20 to 50% is probably going to go back to 1997, 1998 home real estate prices. That being said, last year the high end was driving the market. We really didn't even know about the real credit crisis until basically June or July. Foreclosures came in, but not until September. So look at the market this year. Here's what you have, and probably for the next 18 months out. The foreclosure short sale end of the market is absolutely going crazy. And in the East Bay, you have some of the hottest markets from Oakland to Fremont to Dublin to Hercules, Hayward, etc., and all the places in between. Over on the other side, you have them in Daly City, San Jose, etc. That's going to continue. I think what buyers have to understand is foreclosure now doesn't anymore mean on sale. In fact, foreclosure means for sale, the best price wins at the table.
Well, they're driving up the prices.
Right, and it's going to be basically multi-offer, a lot of cash buyers they're going to be competing with, but it's a very good hot pocket of the market. I think the one one that's come out that's going to be the sleepy giant that's going to rear its beautiful head in this next year is going to be the middle tier of the market. Now that depends where you're talking as to price point, but it's not the first time, basically low end, first time in buyer. It's not the high end, it's that middle in between. What we're seeing there now is with affordability, lower prices, interest rates that are low, you're seeing buyers come back into that market, and I think you're going to see the prices there stabilize, and you're going to begin to see multiple offers in that market.
Nice.
The market that's going to be stressed, I think, for about the next 18 months out is going to be the high end. The high end has lost probably 20% of buyers, not lost, but they're on delay. A lot of them have lost jobs, they're not getting options, they basically aren't getting bonuses. And so I think that in that higher end part of the market, the buyers are holding back. When they come in, they're very selective as to value and basically making sure that they get the right price. That means that sellers in that market are already experiencing, probably in the last 6 to 8 months, a 5 to 20% decline. I don't think it's there yet. I think there's more coming for two reasons. You're beginning to see foreclosures and short sales in the high end, and I think by the end of the year you're going to have to see something which I call have-to sellers. Those are people that never used to sell in the high end when it corrected. They would just wait out the market.
They could afford to.
That's right, but now you're going to see have-to sellers. On the buyer side, what you're going to see are people who will say, I may not want to buy, I don't have to buy, I can wait, or I could rent for a year, and then I'll go back into the high-end market. So I think, look, real estate has come back. We've got two markets out of three working well for us. I think we're close to the bottom. I think buyers are getting interested again. I think interest rates are as low as they're going to go. Probably 2010, they're going to start to tick up at the end. So I think it's a much better picture for real estate as a whole, but I think people need to be very cognizant of what market you're in, how you play that market, whether you're a seller or a buyer, to get the best momentum in the markets.
Create a strategy.
You got it. Positioning and strategy, value, opportunity, making the right decision key.
Yeah, we're seeing that a lot with our clients as well, is that lower market moving well, the middle market just starting to shift a bit, where people can be hitting the market now and expect a sale in a normal period of time instead of a year later.
That's a good thing.
Yeah. Well, gosh, thank you, Carol, so much for your help today. I know our viewers are so concerned, and they have so many questions about real estate and how our changes are going to affect them. Where can they reach you if they have additional questions?
Well, they can reach me. I have a website. It's www.bambooconsultinginc.com. I do an e-newsletter there. They can sign up for it if they want. There's a sample out there. And just in closing, I would say one thing. The nice thing about real estate is you're buying a piece of the earth. That's why it will always be valuable, because what other asset can you think about that's limited, that's rare, it's a piece of earth, something that you can stand up and give to your children, but better than that, your grandchildren, and you can say, you know what, this was mine. That's why real estate, I think, over time will always be a good investment.
I agree with you. We have clients ask us very often of where they should put their money, and I agree with you. I think real estate will always be a great investment.
Absolutely. It has to be part of everybody's portfolio. That is the American dream.
Thank you so much. We look forward to seeing you on future broadcasts, and call us if you ever have questions.